I have Jayakumar with us, Group CEO and Managing Director at Prime Securities. Jakes, good morning. Great to have you with us here on this happy occasion. First up, happy Diwali to you, your loved ones, your family, your team. Really appreciate your time here this morning. Just want to start with this RBL Bank bid, Jakes, if you have any thoughts. I mean, you know, and it's not just RBL. There's two or three have happened before RBL, and perhaps more on their way. What do you make of it?
Well, happy Diwali for starters, and wish everyone, the viewers, the very best, and including everyone at CNBC. As far as RBL is concerned, actually, more from a thesis perspective, in several of my interviews in the past, year or thereabouts, we have talked about how when the first sign of new FDI comes in, the first sector it will and should and has been seen empirically where it comes through is in the BFSI space. The financial services space, especially banking, if allowed to attract capital, can attract serious amounts of it. We saw the Yes Bank transaction, and then we've talked about the IDBI divestment. Clearly, RBL as a mid-sized private sector bank, small to mid-sized, was in a sense ripe for the taking as any external person would have looked at. So the opportunity has always been there. And from a bank perspective specifically, they've done a hell of a lot in terms of cleaning out the issues of the past. Legacy has been cleaned up. They have guided for improvements as their portfolio has changed. They've guided for an ROA of 1% at the end of the year. So they've done, in a sense, the corrective stuff. The stock has responded to that over the last 1 year. It's been one of the best performing stocks in that mid-cap space, or in fact in the banking space itself, especially from the lows. The transaction itself gives it the much needed league shift, if you will, from a small to mid-sized bank to be able to have 40 to 43,000 crores of capital means that you're now rubbing shoulders with, if not the top four, but the next of kin, which means if you leave out the big four private sector banks, the next of them will contain RBL as one bank, especially with the kind of net worth they will have post this transaction. So A, cost reduction, B, in terms of credit rating, C, in terms of pivoting business. I think commentary will now focus on how they pivot to be able to utilize this capital and grow their balance sheet from the current 1 lakh crores to maybe 2.5, 3 lakh crores over the next 3 to 4 years.
Yeah.
That is going to be the commentary people will watch out for. It's a landmark transaction, and it tells you clearly that there is capital waiting to come in, especially in the space that we talked about.
Yeah, no, absolutely. And large capital, right? And it's a controlled transaction. That's what's interesting. Yes. We've seen 10, 15% kind of, but this is 60%. So it becomes a subsidiary of Emirates NBD. And so in a way, a new chapter, new leaf, whatever you want to call it. Sandeep Bhatia is also with us, Managing Director and Head of Equity India at Macquarie. Sandeep, great to have you with us here. Thanks very much. Happy Diwali to you, your team, your family. Appreciate your time as always. RBL, if you have any specific thoughts, but the broader question is financials. Financials were top of the list in terms of what will do well if one asked that question a year and a half back. But then, of course, they didn't do very much. But looks like stars are aligning, stars are coming up in a row. All the measures on the tax front, easing front, and now, of course, some of these large deals coming into being as well. What do you make of it, Sandeep?
So, very happy Diwali and New Year for the entire CNBC team and everyone and loved ones of the viewers. I think the finance sector has always been cheap, so there's always a lot of interest because valuations compared to the rest of the market has been good. It's also a sector which is very liquid, has large exposure both from domestic institutions and foreign institutions. So it's mostly a default position. I think what happened in the current Samvat, which just went by, we saw essentially the impact of low growth, no lending growth. With the GST rate cuts and with now, I think definitely more optimism in terms of consumer spend, in the broader economy, I think volume growth, or which is for banks, loan growth will definitely come back. Margins and quality of book remains good. So all that means that some of the large private sector banks are in a good position. We have to be careful about transactions and deals. While this is definitely a welcome transaction, I think it essentially speaks about the opportunity in the sector rather than the quality of the specific bank. And that is something which we need to be aware of. I think also the fact that, a lot of Middle Eastern banks are not definitely the best managed. I think most Indian private sector banks over long periods of time have seen, at least top 3 banks have seen better management than most of the Middle East banking sector. So to that extent, I'll just say that this is a positive investment and also a strategic direction of the relationship that UAE and India have. So yeah, it's welcome, but there are better banks and cheaper banks over the longer term.
Sandeep, hi, season's greetings to you. Wish you and all your near and dear ones a very, very happy Diwali. And kudos, because you had called out the financial space. I remember in an early September conversation, you said that banks do look interesting. And, they could perhaps start, performing well. And look at it, I mean, the numbers are really coming through. So the question is whether one should buy the whole basket. I mean, you can simply buy the Nifty Financials, the Nifty Bank. But what would be your pecking order between, say, large NBFCs, large banks, mid-sized banks, or an opportunity, I mean, some of the mid-sized ones, including RBL, the kind of transition that they're going through, or say IndusInd Bank, which some can argue can be a turnaround story. So what should the strategy on lenders be for an investor?
Very good question. So I think in terms of, let's say, IndusInd Bank, I heard the call, and I think we have a good management now in place, but it may take some time. So any buyer of IndusInd Bank should have at least a 2 to 3 year time frame. It will require the whole new team which is coming in to make significant changes. We'll have to see how that affects morale and internal organization dynamics. Any big change is definitely painful for the employees. So we have to ensure that this management is able to take everyone along who's part of the bank. So that's a more long-term call, but definitely that's worth looking at. I think in terms of the basket of stocks, I would think if we see a broader push in the economy, the public sector banks and the top 3 private sector banks are beneficiary, and therefore these are the baskets of stocks that you should look at.
Okay, so look at a basket of financials, and very quickly, Sandeep. Again, last time we spoke, you said the market is still in a slow burn phase, quote unquote. So what's the phase? Has the burn gotten over? Is it now a brighter shade?
Definitely right now with Diwali and everything which has happened post GST, it's a brighter shade. I would say that this Samvat year should see better returns than last Samvat year, which has been flat to negative mostly, depending on your point of entry. But I would still be cautious to the extent that if we see a big run-up, we have seen some froth come through in the IPO markets. So there's definitely significant flows which are coming into Indian equities from domestic savers and domestic institutions. So if there's froth and if we see the market run up 15 to 20% from here till Jan, then definitely again the market goes into the same slow burn phase that we discussed some time back. It's a 10 to 12% return market. It's not a 20% or 25% return market. We should be aware of that.
Okay, all right. Got that. Sandeep, Jakes, final word from you. Next 1 year, what do you think? We should be happy with high single-digit, low double-digit returns or a flattish year. We've gone through the grind. It's been a tricky wicket in the last 1 year or so, but we pull through, right? We're bracing for better times, and also private banks is what you like. What about metals?
I think metals would be beneficiaries because I think China has moved towards curbing production in several cases, number one. And number two, in general, if we have a weak dollar scenario, which may have periodic sort of reversions to mean kind of movements, but in general, if the movement is one of, I think what we've seen recently in terms of both currency movements and commodities, especially precious metals, may have been a bit of an excess. So there could be some reversion to mean. I think even the Indian rupee could be at these levels an attractive entry point. In fact, I think at about 88, 8.5, 89, it may have peaked out in the short run. So keeping that in mind, and with oil being low, which is the big sort of tailwind for India, my assessment is we may be happy with 8-9% returns is one way to put it, but we could end up getting much more than that.
Okay, well, we hope for the best and hope the next 12 months are brighter and sort of they glitter more than the patience that the last Samvat has demanded of investors. Thank you, gentlemen, very much for joining in, and once again wish you both a very, very happy Diwali.